is that this is a bigger issue than just in cyber. I think you're finding more and more insurers in general are getting to be really sticklers about these issues of late reporting, and there's history there. I mean, when you look at the environmental risk and you look at asbestos and things like that, these are companies. Many companies have gone out of business because they wrote policies that were loosely worded about when you knew about a claim and when you reported it, and as a result of that, they literally went out of business because of the looseness of their contract wording. Unfortunately, the cyber world is taking it in the teeth right now in terms of this very issue of being very particular in this fast-moving world about what you knew and when. So I think, and it may not be exactly what you're asking, but I would also, with regards to anything that potentially looks like a claim on the tail end, meaning on the back end when you renew a policy, you make sure you are clear with your broker what you know and don't know so that they can at least put your insurer on notice. It doesn't have to turn into a claim, but at least you stuck the stake in the ground saying, I told you about this, so that 2 years later when there's a problem, they knew about it and they can't deny the claim, or they have a harder time denying the claim.
So, Charlie, is this at all analogous to like pre-existing conditions in health insurance?
Well, it depends whether or not the question is about on the underwriting side, and so if that's what you are asking, certainly there is more underwriting scrutiny now than ever. You know, and I think because I've got the gray hair, so I can, but I do have hair.
At least you have hair.
But I do have hair.
No comment.
But you know, maybe for those of you who have been in the business long enough to know, maybe I'm going to use 10 years ago, insurers made you jump through hoops to even just be considered for cyber insurance, and they charged a lot of money. Don't hold me to this number, but over the last decade, because people were not buying as much of the coverage and there were not losses like the industry thought, they lowered the price significantly, maybe as much as maybe 90% reduction in price from where it was first priced down to where it was maybe 2 or 3 years ago. And now what happened is they're getting crushed on losses, and it's swinging violently back to those same, I heard it referenced before, 200 questions, again, jumping through hoops to even be considered for the coverage. And pricing is going up anywhere from 20% on the low side on rates,
400%,
300%, 400%, 500%, with coverage restrictions thrown in.
Yeah, I remember 5 years ago, cyber insurance for a full policy was like max $400, and it was a one-page application.
Lloyd's was making it. I think they were among the insurers who were trying to get it down to 3 questions. Between 3 and 5 questions is what they were trying to get.
Well, to your point, because they were after market share, it was like if you ask 5 questions and you ask 3 questions, I'm going with this company over here.
Right.
And now it's what, 14 pages?
It can be 14 pages. It's tough, but again, you know, and I don't want to defend insurers where there is no defense in some of their behaviors, but in this case, I think it's understandable because of the pace at which the cyber world is moving. They literally are really trying to price a moving target, and that's not easy. I don't think you should be giving them a break. I think you should be buying coverage. I think at some point, I hope we'll talk a little bit about why what Trava is doing is exciting to someone like me who's been in the...
That's actually where I wanted to go next.